Okay, folks, welcome to Swing Trading Today. We are back to our ungodly hour of 5 a.m. Eastern Standard Time. It is June the 16th. Why are we back at this time? Well, for the pandemic, we changed the time up a bit. Went to 6 o'clock because the gym was closed. Normally, after the show, I would go to the gym, be there by 6 a.m., work out, and it's been like 3 months and about a little over 10 pounds later, and I need to do something. The gyms are still not open. I'm going to head down to the track after this and at least put a little bit of road work in. So we're back, 5 a.m. Eastern Standard Time. So please click that subscribe button, like button, share with a friend, whatever they tell you to do. I usually rely on my members to tell me or remind me to say all that stuff. So let's kick things off this morning with economic data that's coming out today, and retail sales at 8:30. That's a big one. That's a really big one. Good morning, Trisha. Another warrior up like me. Good morning, Chuck. Same. Good morning to you. Retail sales out this morning. Again, big number at 9:15 a.m. Eastern Standard Time. We have industrial production, and then we have the Fed chair at 10 a.m. So that'll be interesting. That would be really interesting. If anybody would hold him accountable, I'd be worried. But nobody's going to hold him accountable. Nobody's going to ask him about the legalities of what he's doing, buying bankrupt company bonds with taxpayer dollars. And that is a fact. Hertz bonds are in the ETFs that he was buying or is buying. So we'll see whether or not that becomes a topic of conversation. But I doubt he's going to be pressed very, very hard. Let's go to the pre-market activity. And why? Good morning. Yeah, he clears his throat a lot. Gives him time to think of an answer. Okay, S&P E-mini futures. A strong morning this morning. Now, one of the things I was worried about waking up today after a bullish reversal bar across the board for the major averages was a gap down this morning. You see that many times in the beginning of a resumption of a bear market or a major correction. It appears as though, absent some geopolitical event or a horrible retail sales number, we'll be spared that. We are up a little over a percentage point on the morning. What's more important to me is that we recaptured a resistance level, then retested as support. Now we are holding. We're looking for a follow-through. And that will bode well for a very, very strong day. Again, absent some serious news that comes out. So the E-minis looking good. The NASDAQ 100. As soon as I see this chart, the old adage comes to mind. The test is always at the top. As we approach all-time highs, we're not that far away. And we were just there last week. As we approach all-time highs, do we break out or do we fail? So at current, we are in a wedge formation. We had broken out, retest one, retest twice. We're looking for follow-through now to the upside. I think retail sales may do it because they were down so big last month. Perhaps the recovery this month will help them out or help out the market. Nice RSI, higher lows, good stuff. Let's check out small caps. They're ripping this morning. But they took it the hardest on the chin last week, so that's only to be fair. All right, so we did take out prior lows on the 15th. That was yesterday. But now we have taken out a prior high. All right, so this is a critical support level at around, let's get a number out there, at around 1411. And we have resistance immediately above at 1446. Okay. I'm not loving the fact that we took out prior lows, but we have made new higher highs. It kind of negates the lower lows, but let's see whether or not we finish this day out like a champ before we get relaxed and feeling the warm and fuzzies. Let's go to the dollar. Now, yesterday we really didn't do much in terms of reacting to the market. And the sole purpose of that was that we know from past experience, and I mentioned it earlier, that we do not want to get lured into a market that has a one-day bounce. We've been there before. We've been to that show. We've seen the puppet strings. And we want to be smarter. There's a lot of retail money in the market right now. And frankly, I don't like what the pontificators are on TV doing, demonizing the retail trader as being bad for the market. I don't believe that. I think that if they're smart, they'll do okay, but they just need to understand the market that they're in and that the quick wins could be fleeting. And they need to stay off of leverage, margin. And I think the reason why they're being demonized is because you have these hedge funds that have missed out on a good portion of this rally. And I understand why from a higher level view. But at some point in time, you had to, there's always a saying, it's been out there for decades now, don't fight the Fed. And they decided to ignore the Fed, not even fight the Fed, but to ignore the Fed. All right, so the dollar is under pressure here. I think that it's going to be heavily influenced by the Fed chair's comments today. Hello, good morning. Jedi, good morning. NY Jets, are precious metals finally popping from dollar weakness? I think that the precious metals have been popping despite dollar strength. I'll put it to you that way. I think that things are so bad in terms of the end game. And that's what traders are looking at current, meaning the long-term players, those that have big-time skin in the game, which I like to think I do at times. Sometimes I take quick profits on our gold mining trade. We've been steadily holding and accumulating. We did book profits on silver, so in that aspect, we did not have the long game in mind, but silver's pulled back. So we'll go over those charts. And I think that this next go-around, as we begin to break out to new higher highs, hopefully we're positioned long of silver. We'll keep our gold mining trade on the table, and we're just going to hold it like a football into the end zone because, you know, there will be a bout of inflation. Once this economy opens up en masse, there will be a bout of inflation. I think the best thing right now for Powell is that you do not have velocity of money. You have a lot of cheap money floating around out there, but you do not have a huge amount of velocity of money. And that is where inflation is derived from. Now, I will point out here on the dollar chart is that we may be seeing, I just picked this off, a higher low. So we're at the lower band of support. We may be putting in a higher low here. So let's just keep that in mind. Maybe nothing, maybe something. Let's memorialize this. Okay. All right. Just something to keep an eye out. Let's go to gold. Gold having recaptured critical support at the 1730 mark. So, yet again, what I want to do here, I want to clean this up. Seems like only yesterday I did this. Let's start anew. Give ourselves a fresh perspective. All right, so here's our new trading range on a 4-hour basis. We are, again, flirting with a potential breakout here on gold. We had been attempted to break out several times already, but have been rejected. Let's take a quick peek at a weekly view. Oh yeah, look at this. Look at this. We're poised for a breakout here. We're very, very close. We're right at the apex of this wedge formation. Very nice. So we'll definitely want to be, especially on a retest, if we get the opportunity. If we do break out, ultimately by Friday afternoon, then next week we get a retest of the breakout point. We'll definitely want to be loading up on the miners even more. So I like the setup here. No breakout yet on RSI. And to be fair, you know, we don't want to be cotton candy and butterflies here. You know, we did break down. We have recaptured support on RSI. But the chart is looking healthy. We're off the highs of the week so far, but still very healthy week. Here's a daily view. We're right there. It wants to go. So we'll be keeping a close eye on gold for the remainder of the week. Let's check out silver. Now silver, it's up, but we still have that head and shoulders set up which we did break the neckline here on yesterday, in fact. Then we reversed yesterday morning, and it's holding support. It's held support. Now we'll see whether or not it could battle back. It's like an ominous chart, you know, but many times you get a head and shoulders set up. It looks like, no doubt about it, it's going to go to the downside, but then all of a sudden it negates itself. I remember after the financial crisis, I was shorting the Russell 2000 on account of trend rally, and it looked as though we had a head and shoulders setup. I bet my bottom dollar on it, and man, that head and shoulders setup was negated, and it didn't follow through. And that's where I learned my lesson about head and shoulders setups. It's like the market's figured them out. I don't know whether it's the pattern recognition tools that are out there or what, but they're not as reliable as they once were as mechanisms to get short. Let's check out bonds. All right, so we continue to see money come out of bonds, rotating into stocks. We saw an update yesterday on bonds. However, they failed to hold the gains on the day. They closed positive, but off the highs of the day. Hey, Tommy. Yeah, we can go over VIX. I think it's under a lot of pressure. Yesterday was a very, very negative day. Very, very negative. I don't think I'm telling you anything new, but in all probability, we're heading lower here. Here's the VIX now. We're down 2%. I mean, it's still elevated. You know, when you have at current VIX at around 25 or higher, you're in crash territory. And this is what I meant when I said yesterday on Market Wrap, and even when I began today, I was worried coming into the morning whether or not we would see a gap down below yesterday's lows. Because when you have the VIX elevated to this extent, you know, anything can happen. They call it the volatility index for a reason. There's a ton of volatility out there, a ton of fear, a ton of indecision. So as long as VIX stays above 25, you know, we're not in full-fledged bull market territory where you can just go to sleep and have the market on autopilot. You know, you have to manage your positions, keep an eye on potential weakness in the market. But right now, at current, I would have to say that odds favor equity bulls, especially in light of yesterday's comments out of the Fed chair. It's only at some point in time, you know, if they're buying, think about it, if they're buying distressed debt, not even distressed debt, if they're buying bankrupt debt with taxpayer dollars, at what point will they be buying Apple? At what point will they be buying S&P futures? So at current, we have a lower high on the VIX, and we've broken down to new lower lows. I think that ultimately we move lower here. The question is, do we hold 25 or do we bounce yet again? Sure, Chuck, I can go with the banks. I think the banks are setting up probably pretty good today with yields ticking up a bit. I would probably wait until later in the afternoon, until after the Fed chair speaks. Let the markets react. I'm not sure whether or not he's speaking in front of the House today, the Senate tomorrow, or if it's a one-day event. In fact, let's check that out. Yeah, it looks like he's testifying in both houses today and tomorrow. So just keep that in mind. if we do put on a bank trade, probably want to nibble today, add more, assuming that the market's going the right direction. Hey Pat, good morning. Yeah, I had to go back to 5. I gotta get out and do some road work. I gotta drop some pounds. So the only way to do it is coming on early and getting out. And I'm gonna hit the track this morning. My diet's off. Everything's off. I'm just not feeling good. So yeah, we'll go over the banks. So before we leave the futures, let's take a look at longer term yields or the longer term bonds. The inverse goes the yield. So we are down this morning on the 30-year. We're down on the 10-year, which means that we're ticking up on longer term yields. Let's go to short term bonds. And this is what the Fed really has a lot of control over. And they are ticking down as well. I think last week was the smallest amount of bond purchases that the Fed has made since the pandemic hit. And it looks as though we have broken support. So we know that the banks move inversely of yields. Rising yields help their NIM, then it's just margins. And we already have one financial, not that it's a bank, but it is related to the financial industry. It had a good day yesterday. You're seeing this morning Goldman Sachs follow through on yesterday's price action. It's up about $2 per share, a little bit more than that, $2.30. Let's check out the XLF. So we're already getting a response out of the banks. You can see they spiked the XLF up earlier this morning, only to see it pull back a little bit here. So the banks are responding favorably to the pullback on bond prices and the rise in yields. So Chuck, I would just be very disciplined in my approach, being aware of the Fed chair being out there this morning, and I would probably be a buyer of the banks today, assuming that all goes well with his statement and that retail sales doesn't influence the market in a negative way. We rally up and through $24.75 to $25 per share on the XLF. It's pretty much game on for the financials. Low. Trump must have called Powell not to screw up these days. He needs his polls up. You're probably right. Tommy, do you think gold will go down? No, we already went over gold a little bit earlier, Tommy. I think that we're on the precipice of probably seeing a breakout. So I like the weekly chart on gold. I like the daily chart on gold. I think we recaptured prior support yet again. Silver, a little bit more skeptical of. However, I think that will probably negate that head and shoulder setup on the 4-hour chart and probably head higher, especially if yields pull back. Lo just put a comment. NASDAQ in history always breaks high and corrects 10% before all the way up again. I think that's quite possible that we get a parabolic move higher on the NASDAQ in particular before I don't even want to think about what it's going to look like when this market goes. I really don't even want to think about it. Lennar, the home builder. Yeah, the home builders are in fuego. There must be a lot of 700 FICO scores out there to be able to finance these things. That's the minimum FICO score that Chase will accept for a new home. Do I have anything else I want to go over here? Nat Gas. Finally, an up morning for Nat Gas. We're up a third. We're pulling back, though, off the highs. We may be getting higher lows being put in here on RSI. We're long of the UGAZ, folks. And the only reason why I'm sharing that is because once we get a counter trend move, I want out of that thing. I have really begun to lose my taste for certain leveraged ETFs. UGAZ is one of them. All right, let's move on to some chart requests. I need to go to members first. And if we have the time, I will take some requests. So the first one up is GILT. Ugh. Yuck. What are we doing here? Man, this thing can't get out of its own way. It's interesting. This was sent to me by fellow member Eric, and I just remembered that he put in his email that he was talking about as an extreme oversold trade. So I need to look at it from that lens. We are tapping the third standard deviation Bollinger Band on a monthly chart. We may be retesting the lows of, what is this? I believe March, right? Yeah, March. Okay, so let's drill down here. I don't like where they placed this automated trend line. Oh, by the way, we're using Trend Spider, folks. If you want Trend Spider, I have a new discount with them. I believe I am now the lowest price discounted on the internet. 35% off of all of their premier memberships. And it's free with my 14-day free trial offer, so go for it. All right, that's my plug. I'm not feeling the love yet on the weekly chart. You know, what I would do here, I want to get rid of this. This is irritating me. I don't like this trend line. I like this. I like to go to the extremes. And let's play connect the dots here. I like the fact that we don't have a ton of volume down here. Once you get up here, you could see that there was a tug of war at the, let's call it 850 level. And then above there at the 950 level. But down here, not much in terms of volume. So it looks like selling pressure is alleviating some. Daily chart. So RSI really, we have a 20 handle on it. To me, this is not extreme oversold. And honestly, there haven't been many of them in the past couple of weeks. In fact, it's been a desert in terms of opportunity of finding stocks that are at extreme oversold levels. And I define a stock as extreme oversold with RSI down below the 20 mark. And there has just been really nothing. And that's been for the past couple of weeks. A couple of OTC stocks, but I don't like trading OTC stocks. All right, so let's see if we retest here. I'd have to check the short interest. I need a catalyst. And I want to check to ensure that we don't have ongoing concern issues here. I haven't thought about this company in years. We'll keep it active for a few days. Stokes are oversold, ready to pop. Let's drill down 4-hour chart. Good price action yesterday afternoon. We may get a pop here. May get a rally up to $7 a share. You are seeing on a 4-hour basis higher lows. This is one that I would need to buy on a pullback. It's got to come to us. I wouldn't buy it on a breakout. Because when you get weak stocks like this, they just keep getting weaker. You regret buying any breakout because they generally fail. And I just don't want to be a part of that game. I want to buy at a support level, put a stop right below. You know, if it was a stock that was at extreme oversold levels, I'd take the hit. I'd let, as long as the RSI remain well down below 20, I'd keep taking in the shares, especially at a historic support level, which we do not have. Let's go to the quarterly chart. See how close we are. I know that we do have historical support below. Let's find out where we're at. Where do we close? 604. We could still drop down to 550 per share. You know, ideally, as an extreme oversold trade, I'd be looking at a 3 handle on this stock as a really good risk-reward entry play. It's interesting. I'm not all that excited about it just yet. I think it's interesting as an extreme oversold stock. We're not there yet. Nice double bottom setup off of Ultimate Oscillator, but not enough for me to get long just yet. And again, I need to check out the short interest. If there's not a ton of shorts out there ready to get squeezed, then I wouldn't want any part of it. I need a catalyst. You're welcome, NY. Believe me, I won't push too hard. It's been a couple of months since I've been out there. I'm kind of worried, to be honest with you. IQ. I think I've seen this one before. The monthly setup looks interesting. Not much data here. But we have a new monthly high. Let's drill down. Let's go to a weekly chart. Stokes look beautiful. W formation, they've broken out. Fast line above 50. Slow line, not quite. I would like to have seen a retest. We may have had one if we go to the extremes here. Not really. But we are above this volume bar. A lot of volume there. A tug of war for quite some time. We're now above it. And these volume bars dissipate. So that tells me that we don't have a ton of overhead supply above. Let's see what we have here. $19.88, nice entry point. On close, daily chart. Big day yesterday. Big day yesterday. We have daily resistance immediately above. That's no bueno. So what I would look for here is a quick snapback. Yesterday was a big day. I think that we could easily see a quick pullback today, tomorrow, whenever, sometime this week, because I certainly wouldn't buy it into resistance. A pullback, I'll give you the price in a moment, to support. $18.68 the price. And that marks where we've seen topping tails acting as resistance in prior days and weeks. So 1868 on IQ looks like a good entry point, and you want to put a stop right below that mark. Give it a little bit of room. Pat, UGAZ broke down yet again? Oh my God. What a turd. Pat, I think we're going to have to wait until Thursday. This is a ridiculous move. I mean, we just did a round trip of 1 3/4% within the past 10 minutes. That's ridiculous. I think we bounce back. I'm making that call. I think we bounce back. All right. Shake Shack. Shake Shack looking good. This is a monthly chart. We broke down in March, recaptured support in April, retest 1, retest 2. The support level's holding. This is where you want to put your stop loss. I would give it a little bit of room here. I would use right at $49.29 as a stop price. All right, so weekly chart. This is the value of these automated trend lines. What a time saver. I would not buy these shares at current. I'd be a buyer on a rally and a close above 58.27. I'm going to keep this active. I like this company. Keep it active for a while. So our alert's set. We'll look to buy on strength. Daily chart. Outside reversal day yesterday. But resistance immediately above. And again, 58.50 is where we want to see it close above. Where do we close out yesterday? 55.80. Stokes is still declining. I'd probably give it a little bit of room. You get a pullback, you want to nibble on it. I had no problem with that, given yesterday's outside reversal bar. But I'd still wait before I got aggressive until a recapture of support with a 58 handle on it. Pat, I'm reading your comments right now. Yeah, Pat. I'm probably going to do what Pat's commenting on in the chat box are the performance of some of these leveraged ETF, in particular the Direxion family, where the price is just the decay is just ridiculous relative to the underlying spot price of the commodity. It's just not worth owning them. If it's a short-term pop, fine, all well and good. But to hold these things for any length of time is crazy. Unless, of course, the trend is going in your direction. In this case, UGAZ, we thought we saw a bottoming action, but wrong. Fastly. I got to look into this one. I got to know what a company named Fastly does. Okay, so huge movie here. Beautiful breakout. In May. Beautiful. Weekly chart. I like 50.28 as a support level to well, this is a big trading range. So far this week, we're up and through a resistance level. It is only Tuesday. We do not know whether or not it's going to close there. So I see no rush at current to go chasing these shares, and I have to assume that next week or the week after, we'll do a retest of $50.28. Where did we go out yesterday? $51.98. The obvious sexy buy point was right here at $42.81. Man, if you get back down to that level, that would be really nice. But that may be a bit too much to ask for. Daily chart. We broke out yesterday. All right. Keep it active for the remainder of the week. Okay. So I like the trade here, but we need to have it pull back. It's come a long way. It's a mover. I like it. Love the higher lows on Stokes. Beautiful. We're breaking out on RSI. We may pull back and do a retest here. Trish, Chuck, Pat, did you have any symbols that you want me to go over? J.A., good morning. And for those folks who just joined, if I could ask you to smash that like button, I'd really appreciate it. Helps me out with the YouTube algo. Okay, Trish. All right, with that, folks, wish me luck at the track. It's been many weeks. Oh, Goldman Sachs? You got my Goldman Sachs? Oh, you got it, Chuck. Oh, okay, good. Good. Yeah, I did go over that. Glop and Glog. You got it, Pat. Thanks, Trisha. All right. Support at 3.09. Where do we close out? 340. A reversal so far on the month. Pat, let's do this. Let's do this. G, bring it up. Yesterday was a good day. Pat, remind me on here, please. They're both nat gas plays, right? All right, so we know we have a positive correlation, but it's not a huge positive correlation. I mean, natural gas, which is now overlaid here in black, you can see that the shares of, let's go to a monthly chart really quick as a smoothing mechanism. You could see that traditionally the shares of nat gas and GLOG trade in tandem, but at current, nat gas is just getting annihilated, yet GLOG is not responding negatively. So to me, one of these is mispriced. It's either nat gas or GLOG. And I'm getting the feeling that it's nat gas. I think it's being manipulated. Really, the correlation broke down May the 5th in earnest. May the 5th. We've had an inverse correlation ever since, and it's reflected here on this correlation bar. We're only now up, whereas on the monthly chart, we were trading at 75% of the time. They would trade in tandem. At current, we're trading at what? 20%? There's something wrong here. I would just keep a stop, just in case I'm wrong, which is entirely possible. That wouldn't be the first time. Under 309. But a good day yesterday. And I want to do a deeper dive on nat gas really quick. What's the other one? GLOP? GLOP. The correlation's a bit better here, but the divergence is undeniable. Let's go back again and take a look at the monthly chart. Where you've had a big reversal bar and a retracement on GLOP. Nat gas is just completely fallen out of bed. The correlation is still very, very strong. Daily chart. Good reversal day yesterday. You may want to tighten up stops here if we break down below to a new weekly low. But if you're still long, I see no reason to go selling. I wouldn't go adding more right now. I'd like to see Nat Gas finally find a bottom. Let's bring up UNG. So whenever I see Stokes like this on Nat Gas rolling over and down below 20, we're going to get a continuation nasty sell-off. However, the resolution is pretty strong to the opposite direction. Do we have any examples of prior times this has happened? Not much. All right, so usually this is a very bearish chart. But the resolution is pretty ruthless in the opposite direction once we find a bottom here. We're popping back a little bit already, Pat. All right, I already had it up there. Now, here's what I don't get. You have Nat Gas spot price. This is his after hours trade. The extremes, and it's not reflected on daily closing price action on the regular charts. But we don't have a new yearly low on Nat Gas, yet UNG and UGAZ are making new lower lows on the year. But I'll tell you, we do have a assuming that we rally back this week, we're putting in higher lows on Nat Gas. I think we need a heat wave. We have a failed breakout at current on Nat Gas. So, Pat, I'd hold them right now. I just tighten up stops just in case this gets really ugly on Nat Gas. But I get the feeling that this is manipulated and that while we may get a down day today and maybe even tomorrow, that the resolution, maybe on Thursday with Nat Gas inventories coming out, is going to be the upside. And with that, folks, everybody have a very profitable trading day. Thanks for joining in. And please smash that like button, subscribe, and join us tomorrow morning, 5 a.m. or Thursday night, 6 p.m. Eastern Standard Time. Be well.